You can legally put your kids on payroll in certain circumstances and write off every dollar you pay them. Most business owners have no idea this is an option. In this video, I'll break down the IRS rules for hiring your spouse, hiring your kids, and the mistakes that turn a smart tax strategy into a red flag. These are real deductions, but only if you do them right. So if your child's under 18 and you operate the business as a sole proprietorship or a partnership, the child's wages are exempt from Social Security and Medicare taxes. No FICA. That's a real savings for you and for them. And here's what makes this powerful. Your child's standard deduction for 2026 is $16,100. That means they can earn up to that amount completely tax-free. You deduct it and they don't owe any federal income tax. If you operate through an S corporation, then you'll still need to pay Social Security and Medicare tax on the salary to the child. You would still benefit from the income tax savings through the standard deduction and the lower tax brackets of the child though. But here's where business owners get into trouble. The work the child has to perform for the business has to be real. Pay has to be reasonable for the type of work performed, and you need to treat them like a real employee. So that means a job description, logged hours, and a paycheck through your actual payroll. Handing your kid a cash and calling it payroll is a problem. No documentation or paper trail. Your spouse is treated differently. Wages paid them for work performed are subject to Social Security and Medicare taxes, just like any other employee. Many couples also file jointly, so the salary to the spouse will not move the income to the lower tax bracket. Tax planning works differently here, and paying a spouse may not be beneficial. So one example where it could help. If you contributed the maximum to your retirement plan and you want to contribute more, your spouse would receive their own individual contribution limits upon earning income such as salary from the business. That's a significant long-term wealth building and tax planning move. Whether it's your spouse or your kids, two things are non-negotiable. 1, the work must be legitimate and documented. 2, the pay must be reasonable for the work done. You can't pay your 8-year-old $50,000 to answer emails twice a week. The IRS will reallocate the salary to you if they view the payment amount as inappropriate under audit. So yes, you can write off wages paid to your kids and your spouse. Both require real work, real documentation, and real payroll. Looking for more small business finance tips? Subscribe to our channel today.